I gotta get my Safari up. Good morning. Safari, there we go. I'm gonna move over here and move this down here. I'm making sure I got everything in place. Start the podcast. Boom, boom, boom. Let's see. There we go. Loading podcast. I had a scare this morning. I opened up the computer, and I typically work on an iMac. I don't restart it a lot. And it was interesting. I started up the computer, and there was nothing on my desktop. Very strange. So started up the computer. Ooh, I gotta turn that down. Hit the like button. If you are just tuning in, we're gonna live chat. I might start doing scans. I'm gonna try and get out of here early. Let's see. Let's do brokerage holdings. XLY. Etsy. Target. No. TGT. Morning, Joe. WFC. By the way, if anybody is in Atlanta and wants a dentist, I think it's Sandy Springs Dentistry. Shiva Talibi is the dentist. So if you like white teeth, if you think I got some mojo, if you think you want XLY is already in there. BAC, Goldman Sachs, MRK. Yeah. She was awesome. I have a friend who was at the dentist yesterday, and Shiva helped out just with a phone call. Fantastic, by the way. Never does anything. And your boy here is uninsured. So the key point for me is XLP to make sure that I am not getting crazy stuff done. GBTC had a cross up. Really? Uber, Lowe's at a cross up. This is Norwegian. Datadog. Micron. I gotta bring up Netflix. Netflix is bouncing off that 200 day. I don't know that it's getting down to 300, but Sundial. That one's just keep going down. Palantir. Smile Direct, speaking of dentists. Realty Income. This is a REIT bouncing off the 200 day. I'm not going to bring that one up. Not owned. We're going to go to ARC Holdings. This should come up with a bunch. Anybody holding Apple? Because Apple's up again this morning. Unity Software. Here's 3D printing. I think it was, I think somebody brought up 3D printing. I'm not a big fan of 3D printing. And the reason I'm not a fan of 3D printing is because it doesn't make sense for the average home user. You will have 3D printing centers, I believe. where you upload to Amazon, you have a design that you want to print, you go to the local store. I think in fact, I think there are 3D printers in Home Depot right now. I'm looking at GNS. Unity software. It's got a juicy gap up there at 35, but I don't think they're making money. I helped my dad last night with Dexcom, telling him to sell at 140 yesterday. I'm sorry, at 114. Because I think Dexcom could be in for hurting. Downgrade $19 price target. Yeah, I don't. Target price $35, trading at $30. I don't like that one. Vuzi. Let's go down and scan. We're going to stop the ARC holdings. We're going to go down and scan the Dow 30. Dow 30 right there. Today is a garbage day in my neighborhood, so the garbage trucks are passing by. And I'm trying to look up, let's see, where are the pre-market movers? There they are. I'm going to close that down. I was helping with my dad with equal weighted ETFs too, understanding that if Apple were to have not been so far up yesterday, we would not have been. VRAX, Virax Biolabs, it's up 140%. It was just up 80%. VRAX. This one is going crazy. I've got to go pick up my friend at the dentist this morning. We're at $1.59. Wow. Just this one candle is between 66 cents and $1.58. You've had 12 million shares. Wow. Trade hands already. Whew. Cisco, Merck, and Goldman Sachs. We've got Merck and Goldman Sachs, so we'll take a look at those. Let's go to the NASDAQ 100. There will be a bunch in the NASDAQ 100 that probably cross up. So we'll take a look. Meta is up 2%. That is because of the bill passing through Congress. That will ban, most likely will ban TikTok. XEL, Energy. Energy's just been, that's a good looking chart right before the, let me see, what's the dividend on this one since it's energy? 3.2%, P's 20. This is just expensive. It's a regulated energy stock. It's a utility. Sale 68. I don't like it. No. TMUS, T-Mobile. This one has come down, but it's still not low enough for me. 143 is just expensive. Gilead. That gap. Fortinet. This is the only cybersecurity that is making money, and you've got a cross up here into an ascending wedge with a gap on earnings. They made a ton of money. Let's put it in. My dad owns this one. FTNT. It's not a bad one. It's just a bit extended. Let's go to the S&P 100. Stop. we will stop scanning and let's go to the S&P 100 here. There's the garbage truck, by the way. I heard him around the corner. And I promise to have a little bit more energy when the podcast records. If you're new, essentially the way I do this is I hop on, I am boring as F, I do some scans, and then I wind up looking at the charts, talking about some things in the stock market, and then look at the charts of the stocks that my algorithm has identified as buys today or yesterday, because we haven't opened up yet today. But so far we've got 1, 2, 3, 4, 5, about 15 stocks that we're going to look at. And I'm going to take a look at the core portfolio, look at some of my most recent buys. Charter, I don't like Charter. No. BAC, I have up there. Yep. Duke Energy, we talked about yesterday a little bit. Gilead, don't like the chart. Goldman Sachs, I think this is a better weekly play than I talked with my weekly stock pick last night. I said, hey, I think Goldman Sachs or Bank of America might have been a better play, but his algorithm is his algorithm. But Altria Group, Netflix, I'm not going to bring up all these, but USB Bank. Let's see the energy sector. Let's see if anything catches my eye in the energy sector. Nothing really captures my eye in that one. These are all small. PBR. Somebody brought up PBR. I think it was William brought up PBR. Look at that. Right after the dividend. God, what happened here, CRT? Let's see. What happened here? Cross Timbers Royalty Trust. Let's see. Cash distribution. Current month distribution. Increased by $121,000 on properties. Declared a cash distribution to holders of its beneficiary of 11 cents per unit payable on March 14th to unit holders of February 28th. Okay. So February 28th, everyone got 11 cents per share. Which isn't horrible. It's not a huge dividend. It says 12%. Oh, it's monthly. That's why. Okay. It's a monthly dividend. So here you are. You get paid 11 cents there on the 27th. It's now the 7th, so you'd have to hold it for 20 days. But boy, that seems like a crazy drop. I'm going to watch this one. You know, that seems like just a... It seems like an REI kind of situation if you've been listening for a while, but Sunoco? Not a bad one. In fact, let's move over to the strategy tester since I'm done looking. And we'll look at REI. See where this one is. It's just kind of floundering around right before earnings. The 213. I mean, I still think that this one probably gets up to its 200-day at 255. But, you know, again, you got to 233 from 213. So you had your 20% in here, your 10% in here on this run. The algorithm actually makes you 36% versus losing 10% over 1,000 candles. Your average win is 14%. You win 44% of the time, so it's not a bad stock. I mean, again, I got people in, and they could have made money, but probably holding out, you probably lost some money. But this is the one that really got killed at 232 right there, where it got you back in. Double bottom right there, almost a triple bottom. But yeah. Okay, let's take a look at SPY. What I really want to look at is SPY. We're still in at the 402. We're at 404. In the pre-market, we're trading at 405. I like the weekly because this gives me a good look at the direction that we're going in. There's the button hook right there for January, where you kind of hit the high at the end of January, and February you kind of slip down. Now March, do we go up? If we go back to March of last year, and again, this is a weekly. If we go back to March of last year, you can see kind of took off. This is the January and February slide. You took off, boom. Then we kind of hit the 50-day, and then you traded most of the rest of the year under the 50-day. But we're trying to get above that 50-day again. We're trying our best. And that's an interesting one. Okay. I'm going to look at SPY. I'm going to put in SPY and QQQ. I'll look at both of them, because I like doing that at the beginning. Okay. I'm going to record the podcast now since I'm early. Good morning. It's Tuesday, March 7th. I'm on early this morning. Looking at SPY. Well, let me first say thank you for everyone who signed up for Visible service. If you don't have a phone service, or if you're paying more than $30 a month, Visible service, the link is down below in the link tree. Just sign up for the service. I think they offer a free 7-day trial if you want to use an eSIM. It's simple. I have had Visible service now for almost a year, probably a little over a year. I enjoy the service. I mean, I paid for Verizon before, and I think it was like, I want to say $80, $90 a month, because I am single. I'm the only one on my phone plan. And when I switched to Visible, I was able to just bring my own phone. I had an iPhone X, a 10. I brought my iPhone over, got Visible. I travel. You guys know I do a lot of MLS stuff, and I travel to stadiums. I've never had a problem. Never been deprioritized. In fact, most of the time when I am with other people with Verizon service, Visible is owned by Verizon. So the deprioritization, I just haven't seen. I get the same service as most of the people with Verizon that I am sitting with, and we do speed tests next to each other. So $30 a month, it's fantastic. Port your number in, nice and easy. There was a problem last week where I couldn't receive or send text messages, SMS, to Android users. But those of us with iPhones, we hate Android users. We hate those green bubbles and blah, blah, blah. But I couldn't do that. Found out why. Simple chat with the people at Visible. In fact, I was able to handle my friend's Visible phone. She was here at the house. We just chatted with Visible. Took all of like 10, 15 minutes to fix. It was fantastic. Unbelievable service. You don't have a store to go to. If you feel the need to go to a store, maybe Visible's not the service for you. But again, down below, you can try it. And thank you to everybody who signed up, because I've seen a ton of you sign up. So thank you. And with the link below, you get $20 off your first month. So I wanted to bring that up because I haven't brought that one up. Next, SPY. You're seeing on the screen, if you're watching on YouTube, go over to YouTube and look. I've been on for about maybe 10, 15 minutes. But here's a weekly of SPY. And this is the S&P 500. It tracks. In pre-market, you're up 0.13 at 405. We closed at 404.47. So you're really not moving that much. When you look at the MACD, you've crossed over. And the way I see it, this 50-day line, that blue line right there, that is the 50-day moving average. When you're below that, it seems like a fairly good time to buy because we go all the way back here. You go back to 2016, great time to buy under the 50-day. You go to 2018, great time to buy under the 50-day. You go to COVID, great time to buy under the 200-day. And the only other time that it's really broken that 200-day was 2022, October, at our October lows. So is it a good time to buy? Well, you're kind of right at that 200-day. We're fighting to stay over it this week. If you close the week, again, these are weekly candles. So if you close the week below 4,000, you might be below the 50-day. Chairman Powell testifies in front of Congress today and tomorrow. There will be confrontations. You can almost bet that Elizabeth Warren and some of the folks who have been anti-Powell will bring some things up. He could be a little more hawkish. Remember, the January jobs number that was released in February was really good. We're going to see the February jobs number on Friday. If the job market remains good, he may have to go to a 50-point rate hike at the end of March. That would probably crater the market down towards these October lows. Everybody agrees, and I've talked with several economists in my personal life. I've also listened to several economists on podcasts and on broadcasts. But I think when you hear about the trading range, I think you're seeing the trading range of this 200-day, which is 371, and the 50-day, which is 4,000. And if you're trading within this range for the foreseeable future, you can see they're kind of cinching up and the Bollinger Bands are cinching up. If you close above 4,000 this week, I think you can get to the top of this Bollinger Band, which is 420. And then I think that the MACD caps out. I think the RSI is up high and we start to get a little bit oversold. But from January of 2022, you can see from a weekly, we're still in a downward trend. The 200-day on a weekly is still in an upward trend, but that 50-day is still in a downward trend. The only ones that have moved are the 9-day and the 21-day. That's it. And that the 9 days the green, the 21 is the yellow. So that SPY, you can pretty much see the same in Qs. Now, as far as the algorithm goes, Qs, you're in at 298. You're trading at 300. 298. This is a 4-hour candle. So this was yesterday. Got you in at 298. We talked about it yesterday. If we go to the weekly on the Qs, you can see it's a little bit more reactive where you're just above the 200-day. This is the same as the SPY. So this tracks the NASDAQ 100. It's a little bit more reactive, but you can clearly see, even back when I was doing this in March of last year, I said you've got 22% down to the 200-day. And I was calling that the potential lows. And we pretty much bounced off that in October. So if I were to identify an absolute low in the Qs based on this weekly, I would again identify it as close to the 200-day, which would be about 280. I think if you get below 280, I think you load up on TQQQ. Honest to God, I think that's, but I can't tell the direction of the market just yet because you can see we're up and then we're down and then we're up. So I want to see a little bit more, and with Powell testifying and the jobs number coming out, it's going to be a little bit tough to tell the direction of the market. So what do? Well, let's take a look at some of our core portfolio. One that I read about that we had a recent cross-up, 94.22 was the cross-up. You're trading in pre-market at 93.74. So you're slightly below that. What I wanted to do with Amazon in particular was go back to a weekly and look at prior to COVID. So if we go back, COVID is down here, March of 2020. You're bounced right off your COVID low. Buffett bought right about, I would say here, when it was about 95, 96. He's held it. This was all the way in the middle of 2019. So you're trading right in the area where Buffett bought. It's always a good thing. I mean, he hasn't sold any of his Amazon. He kind of buys and holds. So the 50% up that he saw, you're probably still looking at it. In hindsight, probably should have unloaded a lot of it up here at 160, 170. But I still think Amazon has the best service, even though they screwed up my sneaker delivery. They gave me $5. They still won't refund me for the delivery that hasn't come because, quote unquote, it's still in transit. Well, it's been a week, Amazon. It's been a week. Still hold the stock. I'm not giving up my Prime. Prime video service sucks. Alexa sucks. It listens to absolutely everything, but Alexa is one of the better speakers in my mind. I think Google outweighs them. And so if you want Google, I think Google's a buy as well. We talked about yesterday how we had a cross up on Google at, I think, 94. I'm sorry, we had a cross up last week, $90.67. Boy, at 95. That looks like a fantastic buy, doesn't it? My particular preference on Google is anything under 100. If you get it with the closer to 8, if you get an 8 handle, like an $89, oh my God, you're doing great. I think you're doing fantastic. You can also use a buying a put or selling a put option. Sell a put later out if you think it's going to be 85. Sell a put at the end of April for $85. Collect the premium on that sell. The worst case, you have to buy the put. You have to buy the put. I mean, that's essentially what it is. And if you're getting Google at $85, kudos to you. So Amazon is one that you could absolutely 100% look at. Apple is another one. If you've listened to me before, you know Apple is my savings account. If we go over to the S&P heat map that is on FinViz, what this looks at is this is the size. The size of the box is the size of the market cap of these companies. Apple, Microsoft, Google, Amazon, they're all huge. They're enormous boxes. For this market to continue to go up, you need these stocks to go up. If the market's going to go down, you need these stocks to go down. Make no mistake, a company like Oxy, a company like PSX, Phillips 66, a company like DuPont de Nemours, DD, which is basic chemicals, or even GOLD, NEM, which is Newmont. If something like that. If you're looking at these stocks and they're going up and down, they're not moving the market as much as that box. I mean, this gold box, this CE, Celanese Corporation, they're a chemical corporation. I mean, there's probably 500 of those in this Apple box. So take a look at those. Apple is my savings account, essentially. It is a high PE. If we were to go and look at the Apple statistics here, AAPL is the simple. And if we were to go, the PE is 26, the forward PE is 23. It gives off almost no dividend. Year to date, they're up 18%. 1 year, they're down 7%. You're 14% off your 52-week high, which was 179. You are 23% above your 52-week low, which was right around here. I've always said, and I've held this for years, while Apple has been trading in this range probably since, I would say, if we go back here, let's look at a weekly on Apple. We'll go back to a weekly. All of last year, I said if you get it in the 120s, you're doing fantastic. If you get it in the 130s, you're doing good. If you get it in the 140s, you won't regret it. If you get it in the 150s, I think you can get a better price. But that's kind of been my way on Apple. And you can see, this goes back to March of 2021. Get it in the 120s. And I said that. And it went all the way up here to 145, January of 2021. And during January 2020, all of 2021, you went up to about 180 here in 2021, in December 2021. You know, again, you went up to 180 and you spent the next year kind of down in the dumps going and trading just in a range. Apple's my savings. Yesterday, Apple got a huge upgrade from Goldman Sachs with a $199 price target. If we go over here, the average price target was 168. So if you're trading at 153 and people think you can get it to 168 or 168, yeah, get it. I mean, that's essentially what it is. Another one that we've been tracking recently in the core portfolio because it had a cross up is Cleveland Cliffs. Cleveland Cliffs for me is a trade. It went down yesterday. You're seeing kind of a button hook. It does not have a dividend that it pays. Let's go over and look. Let's look at some of the core. So its PE is 8.69. The forward PE is 10. A little bit dangerous with the forward PE being higher. They have to grow earnings. But these guys have increased rates by 3 times, cut the cost a few times. And they should return to profitability with the infrastructure program, with cars being made at record pace now that the chips are being delivered. I think it's $30 stock. I'm holding on to this. I got in at about $20.50, I think. $20.80, I think. It was in the high 20s, $21.84. I'm waiting to see if there's confirmation. If we get above that 9-day again, I might add to my portfolio. I told my dad yesterday, Disney under 200, under 100, just add to it. I think I bought it 112. I'm going to add to that one. I said yesterday the weekly stock picks is JP Morgan. I think Goldman Sachs is a better one. In fact, we had a cross up yesterday. Goldman Sachs 356.94. You're trading at 357. So you're right there. It is still a bit extended for me, but Goldman Sachs just has an opportunity to make more out of what they're doing. We talked about Uber having a cross up. They had a cross up at 34.59 yesterday. So I think you could probably get this one closer to 30. Anything under 30 on Uber, great price. Great price. Let's talk about natural gas. BOIL is one that everybody was interested in. Everybody was looking at. The algorithm 522 was the buy-in. You're trading in pre-market at 604. I've said it before and I'll say it again. Anything under 6, I think you can buy it. Anything over 6, you take profits. That was clear in the last few days. So when you look here, this is the 65-minute algorithm that we have on TrendSpider. This is a day trading strategy where essentially the algorithm is under the 8-day EMA. When it crosses under, you sell. When it crosses over the 8-day EMA, you buy. If you want to set up this algorithm, just sign up for TrendSpider. The link's down below. But this is super simple. If you sign up, I'll give you my 4-hour algorithm as well, by the way. But this one is on a video that I have on my YouTube channel about trading with TrendSpider. And David Yoakum came up with this one. It has been great. Here's the 6. This is 65-minute candles. February 22nd, it got you in. You got out with a 1% gain. But you probably stayed in. It got you back in at $5.13. You ran this all the way up for a 20% profit. Then it got you in at $6.31. You got out with a 5% profit. Then you got in at $6.79. If you didn't get out with a nice, up here at 8, with a nice 10, 15, 20% profit, whatever it was, but you held on thinking, oh, I'm going to be in here. Well, you kind of got a little greedy. You got out with a 10% loss. Again, this is 65-minute candles. So this isn't like you have to sit in front of your computer and just look at candlesticks all day. Right now, the algorithm still has you out. Our 4-hour algorithm has you still in at $5.22, even with that drop. Now, here's the thing. Gaps don't always need to be filled, especially on these levered ETFs that trade on futures. You can see a staircase just down right here. So gaps don't always need to be filled. But with this little gap here, with natural gas being brought down so much, I think you could go back to $7 or $8 on BOIL. If I would play stop losses very tight, particularly in this one. If you buy at 6,
I would say put a stop loss in at about $5.75. Nice and round, nice and easy. The MACD is kind of just hovering. You can see it's got a little tick downward. If it crosses under, the 4-hour algorithm might get you out. But again, if we switch to the 65-minute algorithm, which is a day trading strategy, it is not a long-term one, even though long-term, this one blows away actually buying and holding. But the MACD is kind of still down. It hasn't crossed up. This one might get close to the 8-day EMA if it continues just hovering around 6 or between 6 and 620. So it might cross up on the 8-day EMA. But again, I think if you put it in for 6, I think you could do well with this one. So I watched a YouTube video yesterday or this weekend about a dream team of ETFs. The first one is SCHD. And this is an Schwab equity ETF. This typically pays you a large amount of dividends. And this would be your, hey, this is the established kind of quote unquote value portion of my portfolio. And so what the author was saying is, hey, these are two ETFs that you could probably balance out to have both value and growth in your portfolio. SCHD is one. It is a good good ETF. You can see it pays a 3.39% dividend. Let's see. Let's look at SCHD components, complete holdings. Let's look at that one. And you can see right here, SHD portfolio. We've got Broadcom. We've got BlackRock, we've got Cisco, we've got Home Depot, we've got Coca-Cola, we've got Lockheed, we've got Merck, we've got Pepsi, Texas Instruments, Verizon. Nothing super sexy. The algorithm has you in at 75.43. You're trading at 75.69 right now. Again, it's a good entry point. This is one that you probably don't trade. Over 1,000 candles, a 2-year period. The 4-hour algorithm makes you 4.74% versus 6.37%. But again, you're getting a dividend, so I don't know how the dividend works in with that one. Your average win is only 3%. So in my mind, I think you just buy this one. You can see during the October lows, this was below 70 at 67. So I think 70, probably 75 is not a bad price point. You're right at the 200-day. As long as you buy an ETF like this around the 200-day, you shouldn't get too hurt in the long run. It should continue to pan out. Now, when you look at the weekly of this one, you can clearly see during COVID, this one got hit really hard, went under the 200-day. The October lows got close to the 200-day, but when you're looking at a weekly, the key trend line is that 50-day. You're above the 50-day. You could probably wait for a better price on this one. But this one, it's got good core portfolio. And so I wanted to bring it up. SCHD. For those of you that just want to play kind of quote unquote safety. And then there was another one that this person brought up. QQQM. Which is basically a model of QQQ. But QQQM instead has about half the cost. So the expense ratio is significantly lower. Now this one doesn't have as many candles as QQQ does. It doesn't have the history. I'm pretty sure it just trades on the same kind of thing. 122.86 is the buy-in yesterday on this one. 123.44 is where it's trading. So, but I wanted to. You can do your own research. But essentially, what this does is the QQQM brings you into the growth because it's the NASDAQ 100. So you can buy QQQM, and SCHD provides you the value portion of your portfolio. So between those two, that's what the author was doing. I kind of like it. I mean, I thought about it, as I head into my older years, I probably have to get a little bit safer. That's probably a good strategy for me. Meta. If you haven't heard, TikTok might get thrown off the U.S. There is a cultural war going on with China, obviously, And there is a lot of quote-unquote fear-mongering that's going on, that the Chinese are surveilling the U.S. citizens, blah, blah, blah. I kind of agree with it. But again, I think this is more just a war of, hey, we're going to topple your industry and you guys topple us. The U.S. doesn't make a lot of money on TikTok. China, we don't. I think Facebook and Google and a lot of other things aren't in China because of the openness of our system versus the closed sense of China. But Meta has a buy-in at 184. You're just getting off a 44% gain. 184 is the price. You're trading at 189. You're up 2%. If for some reason Biden were to take the step and ban TikTok from the U.S., Meta would explode. Yesterday, you saw what it did to Snap. Meta would probably be a $250 stock within no time. Snap, you had this buy-in here at 10.15 on March 1st. You're trading at 11.83. So you're up, 10% already just on Snap? A crappy little, VR, virtual reality kind of situation. The only reason I'm on Snap is because the kids are on Snap. My friends' kids, they like to snap me. Another one that you could probably, I don't know that it would necessarily benefit, but I've called this one out all the way since February 22nd, where it was at 25.27, and today it's at 26.70. So you're about 5% up, 5, maybe 6%, and it's recently just run a lot. But Pinterest, PINS. So the three that I would play personally in the social space are Meta, which is announcing layoffs as well, which is the reason they're up today, is because, again, Meta has a cost problem, not a demand problem. It's a cost problem. So I'd play Meta, Snap, and Pins. So let's get to some scans. XLY, consumer discretionary. Let me type that one in correctly. This is one that I've said could be one of the hottest ones for the year. We're just getting out of a 12% gain on this one. You crossed up at 146.68. Personally, I hold it. It is in the core portfolio for TrendSpider. If you sign up for TrendSpider, it's in there, XLY. Another one that I own that is not in the core portfolio, but I do believe in, and I think it's probably a good opportunity, is Etsy. They just passed earnings. They made 77 cents per share. This was considered to be a pandemic special. I don't think it is. I think people make little trinkets, and I think people make T-shirts, and I think they put them on Etsy and they open up a store. It's easier than Shopify because you don't have to own your own page, and Etsy you can search for stuff. So it's a little bit different for small businesses. So say you have you make trinkets, figurines of dogs, and you have a customization. Well, you could open up a Shopify store and do it yourself and promote it through social media, or just put it on Etsy, and Etsy allows people to do searches for it too. So I like Etsy. I think there's a big opportunity with Etsy. I don't think it's just a pandemic play. It is a bit expensive. Etsy is growing into their earnings. Right now they're not making money, it says, but their forward PE is 35, which isn't horrible. Price to sales is 5.63. Year to date, you're down 0.83. For 1 year, you're down 25%. For 6 months, you're up 11%. I think this one gets back towards the 52-week high, which is 161. I think you've got at least 140 in this one in a good market. So I want you to be careful, because while it crossed up at 122, if Powell starts saying, hey, we've got a lot of more work to do, we might go half a point instead of a quarter of a point, you could be it could be a problem for a company like Etsy. So I would add in slowly, but at 122, I may add. I'm down on this one. In fact, I may add to it. Target had a cross up. I think we talked about this one yesterday, how it got you out. Recent 165.21 is the cross up. So if you're holding this at 168, don't sell it. 165 in my mind is a great price for this stock. The MACD is down low enough so that if we start moving in a direction where the consumer is good, I think you cover this gap up here to 211. Simple as that. I'm holding it. My average purchase price is somewhere in the neighborhood of 111, but I've bought it the entire way up. Wells Fargo, another cross up. I bought down here at about 41.50 or so. I am still holding. Could have gotten out with a 11%, a 14% gain, somewhere around there, but it gets you back in at 46.59. So I am personally holding this one. I like this one. It is fairly priced in my mind. I think they're through all of their kind of scandals, if you will. 2.57% dividend. The 52-week high is 54, so you're only 14% below that one. But I think this one has been beaten down. If this one hits 50, I'll probably look to sell at 50. But I'm holding it. Uber. I've said Uber, and I'll continue to say it. I don't know that it's going to get down here, but Uber has another cross-up. It's coming off a 34% gain. Another cross-up at 34.59. I'd like to get Uber under 30. I absolutely should have been buying Uber here. This is not only a company that makes money on Uber Eats, on Uber Rides, on Uber Freight, but recently they started putting ads in their app. And based on location services, they're killing it with the ad business. So Uber I like. Bank of America, BAC. If you didn't like Wells Fargo, then you got to love Bank of America. Bank of America, 34.24. You're just coming off a 4% gain on this one. This one's it's too big to fail. Their PE is 10. Their forward PE is 9.25. Their dividend is 2.58. Their 52-week high is 44, so you're 23% off that. You have a little bit more growth than Wells Fargo. I think this one's fine. The average target price from analysts is $40, and you're getting it $34. So Bank of America is another one. Another financial is Goldman Sachs. We brought this one up yesterday as the weekly stock picks is JP Morgan. I said Bank of America or Goldman Sachs were the two that I liked. This one, you're just past your ex-dividend date, so you're not going to get paid, but the RSI is coming off 27. 356 is the buy, and you're trading at 357. I think you can get it for 356 today. One that has been a weekly stock picks pick that shot up yesterday and has a buy at 111 is Merck, MRK. This one's just a behemoth. I mean, as far as healthcare goes, you can't go wrong with Merck. Let's see. I think they're pushing up against 52-week highs. Yeah. Your 52-week high is 115, so you're 3% below that one. Your PE is 19. Your forward PE is 12. It's 2.63% dividend. Performance year to date, you're not up much, 0.14, but over 1 year, you're up 44%. So Merck is in our core portfolio. I like it. It's just, I hate buying things at 52-week highs. So I think there's better opportunities out there. XLP, which is consumer staples. 72.73. This is one where you just look for entries. 72.73 is the entry. If you want to get in on consumer staples, XLP had a cross up. You can look at the components if you'd like. Just Google it. As far as Bitcoin, GBTC had a cross up at 1177. This one, the algorithm loses you 49%, but buying and holding this one loses you 76% over 2 years. Your average win is 26%. You can see here in December, $7.79, and we got out with a 44% gain here in 1 month, February. Recently, you've had two sales for losses here, one for 2%, one for less than 1%. But you do have this gap up here between 13 and 13.96. This one trades on Bitcoin. It is not one to hold. Because it just doesn't have the value that Bitcoin does. If you want to hold Bitcoin, get yourself some dry storage, buy some Bitcoin, and just put it on a drive and have it in your house. That's all you do. Netflix. I've talked about having a buy-in at Netflix at 300. It had a cross up at 318 yesterday. Am I believing this one? I don't know. I still have to do the video on Netflix. It's trading at 311. The candle's a little big. It's not quite down. It's plus 0.31%. So it closed. This is just, buying it at its high yesterday. 311. The MACD is so far down. The RSI is at 33. Do you have 340 in this one? Probably. I mean, it wasn't long ago that it was at 350, February 17th. So it's a little bit expensive, but I got to tell you, going on Netflix and buying their algorithm for what to suggest, it's by far the best. Cisco Systems, we're getting into the Dow right now. Cisco Systems, CSCO, 49.51 is the buy-in. It's a little bit expended. You're past your earnings. Your ex-dividend date is coming up on April 4th. You got plenty of time. This is just a mainstay. Is it getting back down here to 40? I don't think so. It's a well-run company. It's a PE is 18. It's just a solid tech company putting off 3.1% dividend. But we talk about Cisco all the time. If you're new, I talk about Cisco on a monthly basis because if you look back in the dot bomb era of 2000, this stock was a $70 stock and it hasn't made its way back. And if you know anything between 1980 and 2000, Cisco was going to run the world. This was absolutely 100% the Apple of that day. So I do think that it's probably a good buy. Cisco's not. It's a much better run company than it was back then. They just lost their way. They thought server-based, premise-based servers was going to rule the world. Well, cloud and stuff like that. Listen, that's the way the world will run. Fortinet announced earnings. They're the only cybersecurity company that's actually making money. Palo Alto may make money next quarter, but this one at 61.34, you're buying into this rising wedge. You've got a ton of gaps back here. Your first gap that kind of been covered, 63. It's a bit expensive, especially with this run. The PE is 57. It had a cross up. Year to date, you're up 25%. My dad owns it. It's in the NASDAQ. I like it. So one that I found in the energy sector that seemed interesting to me, and I would tell you, do a little bit of research on it because I'm not 100% sure that this is a good one. This could be another REI. We looked at REI before. But CRT, Cross Timber Royalty Trust. It's an interesting one. It pays a dividend on a monthly basis. The dividend is about 12%. You had a cross up here at 1804. Now, what's interesting about this is the algorithm makes you 35% over 2 years. Buying and holding makes you 84%. So because it's in the energy sector, it has made significantly more money. But from just buying and holding over 2 years, your average win is 10%. You win 42% of the time. You are coming off this huge downslide. And I couldn't find a lot about this huge downslide other than, hey, they've announced that they've endured some costs. So if you're buying here at 18, I would say you're looking for 23 as your top. But if that death cross happens, expect this one to go down significantly. If we look at a weekly of this one, and again, I'll look at some of the details, but if you look at a weekly, during 2021, this one dipped all the way down to 10. It has just had a crazy run all the way from COVID. And if you look on FinViz, there's just not a lot on FinViz. The average, there's no target price. There's no analyst looking at this one. You can see declares cash dividend of 11 cents per share. There's no real insider trading. It's just not, there's not a lot of data here. So I would be careful about this one. We alerted a sell signal at 2024, and we're able to close this one at a profit of 1887. See more details at stockautomate.com. I mean, look at some of the notes. It doesn't look good, but the chart, I mean, without the if I were just looking at the chart and not the fundamentals of this one, I would say, does this propose an opportunity? Because the MACD has just failed completely. And if we look at some of the volumes of this one, if we pull this volume back to, say, August 2022, where we were at kind of a high, you can see there's a lot more people holding up there than down below. If we pull this back to, let's pull it back to 2021, the end of 2021, you can see there's some volume here at 15, but there's more volume up here at 19. So I'd be careful with this one. It came up. It was interesting. Okay, if you made it this far, hit the 5-star, hit the like button, do whatever you want. If you're listening on YouTube, make sure you subscribe. Make sure you hit that like button. If for some reason you're not subscribed on YouTube, go to the description below, and there's a link tree. And in that link tree, you'll find all of my all of the socials to reach me. I'm on Twitter. I'm on Instagram. I am on Twitch, not active on Twitch. I usually broadcast live on YouTube. If you want me on Twitch, just let me know. You can look under the picture on the link tree, and there is a Facebook logo. All of the socials are down there with their logo, but all the way to the left is the Facebook logo. That's our private Facebook group. If you want to join it, if you want to talk stocks, if you want to ask me questions, go on there. And like I started out, Visible is the sponsor. They're great. I have their phone service. I pay $30 a month for it. If you sign up, you get $20 off. I get $20. It's a great service. I actually love it. Also, if you want charts like you see on YouTube, that's TrendSpider. I will give you my algorithm, which is a 4-hour algorithm that plays nicely in the center. It underperforms in a bull market. It overperforms in a bear market. Depends on the stock that you pick, but I like it. We also have the 65-minute algorithm, which is day trading, which you can use on Boyle, which you can use on any of the triple levered ETFs. I also have all of our watch lists. There are several watch lists in TrendSpiders. There's the core portfolio. There's the energy names that we trade, which include PXD, Devon, Oxy, all of those names, along with some of the ETFs like Boyle, KOLD, UCO, SCO. There are the levered ETFs that we trade, like TQQQ and SQQQ. When I go over SPY and I go over QQQ in the morning, first thing on this podcast, the reason I do that is so that if you want to day trade any of those stocks. We also have low-cost Vanguard ETFs, which are nice and easy. I just give you entry points into that. And then the spider sectors. And then I've got my own watch list and blah, blah, blah. I'll share most of those lists with you if you'd like. I'll also share the scanner. So if you sign up for TrendSpider, go down below, use the code DSP25. It's 25% off coupon. If you get better than that, just tell me. I'll still share my algorithm with you. I just have to have you moved over to my my list. So if you have any questions, hit me up. Thanks, guys. Talk to you tomorrow. Export song to disk. Export. Morning, Joe. Morning, Sherry. Morning, Bill Murray. I have wanted to look at VRAX. I talked about. Oof. That one's flying. I want to look at Boyle. I think if Boyle holds $6, I may buy into it. The other one that I want to look at is PXD. PXD's holding up there at 209. Oh, I gotta sneeze. Oh, God. Woo! Morning, Apoletti. How you doing? I just did the podcast. I'm trying to get out of here. Oof, by market open. And my apologies for sneezing. I'm looking at PXD. I'm looking at Boyle. Boyle's the one that I really want to get into Boyle. But I am just not quite sure about the price of natural gas holding up. While it's at $2, whatever the rate is, okay, come on. I think it's still downloading from a GarageBand. I did not like yesterday's podcast, by the way. I think I did a crappy job yesterday. I don't think I did anybody favors. Even though I said buy Apple. We're not going to use swapping tubes. Oh, by the way, if you're not in the Facebook group, you guys may, Sania had some comments yesterday to me on the YouTube. Let's go and hold on. Let me find it and I will show it to you. Jason of TrendSpider is streaming as well. The rotten company behind all the porn. Oof. Let us go and look at the comments that Cinia made. And I got to look up how to look at the comments. There we go. I will bring you back to Safari. So first, Cinia wanted to clear up any confusion that I had. My system is not on a platform. It is purely based on calculation. I can capture intraday targets, short-term targets, as well as long-term. As I thought over regarding your suggestion of starting YouTube, but right now for some time I am dropping that idea because I may go in a big way. She's going to go big. I don't want to distribute now on as you think I am a spammer, which I am not. I do not, let me be clear, I do not think Cinia is a scammer. I don't think she's a spammer. I don't think she has anything but good intentions. I just don't think she's a right fit for the audience here because the audience here doesn't do targets and support levels and things of that sort. I try and more point you towards a swing. Hey, buy it here, under here, over here. You can sell it because I'm not responsible for people's, hey, you'll make 10% here and 15% here. No, I just want to put a target just from the way I see the chart. And I'll go and look at the fundamentals and tell you if I think it's a smart way to put your money in. Like, for instance, Apple. At 155, I'm questioning whether you should buy Apple. If you want to buy Apple for the next 10 years, 155 is probably not a bad price point to get into. If you're thinking for the next, month or two, you want to get into Apple, 155 might be expensive, specifically if Powell starts to bring the market down. Art Cashin, I don't hear him right now, but he's on CNBC. I guarantee you the guy is saying he's not going to do that. Powell isn't going to do anything more than a 0.25% rate increase. He's only going to do 0.25 because Art Cashin, who is legendary, by the way, if you don't know who Art Cashin is, he's the UBS director of floor operations. He's great. He's unbelievable. Understands markets. I really, really like his guidance. But Art Cashin says if Powell were to do a 0.5% rate increase at the end of the month, that he's lost all credibility. Because then he says the Fed would be basically conveying we have no control over the market. So, Zephin, Boyle could easily go back to 2. And I don't know if you listened to the podcast, Zephin, but on the podcast, I said, hey, if you're going to trade Boyle, I would have a very tight stop. If you buy it under 6 and if it's at $5.99 right now, I would probably have a stop at $5.75. That's how tight I would probably trade that one. Save episode. Because I just think you're basically gambling at that level. Oh, and if I'll go back to Sania once I'm done uploading this episode, because she said she's going big, and I want you guys to go subscribe to her, but she's not going to do YouTube, so it doesn't matter. She needs to tell. I'd like to know where she's going to put her strategy in play. I'd follow her. Honestly, I'd follow her. I don't, listen, everyone's strategy is different. My strategy certainly is not what some might like. Some do, some don't. I bet people leave. I'm not offended. QQQM. Boyle. Meta. Snap. Pins. I'll look at PRT in a second. What am I going to call this? Three 723. Okay. Publish now. Let me just put this up on Twitter. And I don't think this gets me any listens, but Mark Zuckerberg, February 1st, Meta earnings call. Okay, I just gotta get rid of 2. There we go. I got rid of it. Everything fits. And we'll go. And then I'm going to Twitter. And I'm going to put in, I should look at Tesla too. But, SPY. SOXL, AMD, AI, F. Veil. GNS. GNS was up there yesterday as the most active. BAC, NEO, UNG, BLPH, HYG. Okay, tweet. here is the rest of Sinia's comment. Don't compare my system with Bruno or Warren Buffett. I don't know who Bruno is. Somebody suggested it was Bruno Mars, but I don't know that Bruno Mars is an investor. Never compare and don't judge anyone from money or number of subscribers. I never compare anybody from money or number of subscribers. But Ms. Sania, if you're telling me that you've never lost on a trade based on your system, then you've got to be the richest person in the world, because if I had 100% win game and I had $1,000 to my name, I would at least make $1,000 each day. At least $1,000 each day, because I would trade at least once a day. And that $1,000 would easily make you another $1,000. Easily. If your system has 100%, easily make you $1,000 a day. With just $1,000. If you had $100, you do it $100. But if you do that over a year, I mean, 200 trading days, that $1,000 could easily get to $300,000 by the end of the year. Easily. If not more. So $300,000 over 3 years, you could probably make somewhere in the neighborhood of $5-10 million over 3 years. She searched for me with Tesla. But I was nice in my reply, I thought. I don't think she's a spammer. I think the last time you joined, she sent a ton of messages. And kind of like I told her, when you send messages with specific targets and things of that sort, on a live stock picking group, it's kind of like walking into Starbucks and saying, hey, Dunkin' Donuts has better coffee. And CRT, let's look at PRT. This is the Permarock Royalty Trust. That's a long-term dog. See here, let's look at multi-symbol view. I think I can look at CRT and okay. We'll look at CRT, and we'll look at daily candles, and then PRT. Daily candles. So there's the 200-day. It's the 200-day. So, Sherry, here's where I would look at these two. This is over, both of them are from December 2021, and it's daily candles till today. So kind of what? Almost just over a year. Now, I would say there is a distinct difference, and I guess you can't see the right-hand side. So let me shrink this up a little bit. Boom. There. Now you can see both symbols. But I would say when I look at CRT on the left, I'm seeing an upward trend. When I look at PRT on the right, I'm seeing an upward trend with a significantly lower trend. And so from just patterns, I would say CRT looks at like a better opportunity than PRT from just a pattern, because again, you have this enormous move down. And I'd say, hey, any reaction in a market is an overreaction. Sorry. Let's look at the volume on this one. So I got volume on both. The volume also on this one, see the volume trend up? The volume trend on PRT seems to be down. So I would worry a little bit about PRT on that one. But when we go back here and we look at PRT, This is on the 4-hour. You got to buy in here at 6.99. My fear on PRT is that you're still moving downward and you just had this death cross of the 50-day. I'd be a little bit worried about PRT. But let's look at CRT has a 10.14 PE. PRT has a 7.51. It's a 13% dividend. Year to date, you're down 9%. No target price. From 2 years ago, downgrade to $3. Whew. I think they both run up. Oh, look at this. We've had a lot of sales here. A lot of sales from Boz Energy. Wow, that adds up to be a lot of money from a 10% owner who's getting out. Yeah, they're getting out. I'd be a little bit worried about PRT. I mean, look at all the sales here, and you can see the cost. The sale price, they're selling at 7. And I'm not saying CRT is any better. What's wrong? You okay? I love you. I'm not saying I don't know the differences. I mean, I just don't know these companies. They're both, I mean, this only has 6 million shares floated. It's got a market cap of 114 million. It's a tiny, tiny company. But CRT, if we go to CRT on the, here, I'm going to bring this, I got to cross this down a little bit. No, I want to bring it up. I think that's going to be the, yes, okay. That shows you the results down there. And you can still see the chart. But CRT, 10-day volume is 113,000 shares. 10-day volume or 90-day volume is 55,000 shares. So CRT, you do have some upward momentum in the volume. You have some upward momentum in the stock. PRT, 10-day volume is 67,000. 90-day volume is 59,000. Not a huge amount of difference. I think CRT kind of looked to me like when I looked at it, and remember how I did this. I think you were there, Sherry, or you might have been getting coffee. I just did a scan of the energy sector in TrendSpider, and I saw CRT, and I looked at the chart, and I said, ooh, this downward move right here looks interesting. Now, the last 1861, it got you out. You're trading at 1804. It got you back in. It could flounder around here for a while, and that's what the MACD kind of looks like it's going to do. But okay. And I think I'm going to get out of here for today early before the market opens. I've got to pick up my friend. So I got to go shower and do what I need to do to get my day going. Anybody have any other questions for me? Concerns? Where's Boyle at? I think it was dipping under 6. Oh, it's at 612. You've got some here. I'm looking at Active Trader Pro. This is Boyle. You've got some confirmation here up. But so far, it's not enough for me to say, ooh, absolutely, we're going to wind up. Although now it's getting some good movement up. Your 10-day volume's 81 million. Your 90-day volume's only 30 million. So far in pre-market, you've traded 6 million. I like the fact that the VWAP's at 602. So you can see the VWAP right here is going up. The movement of that pink line. That's a good signal. I mean, this was the signal right here, $5.80, where the Bollinger Bands are super low. Here, Safari view will go back to the 65-minute on Boyle. This is CRT, but I'll switch to Boyle. Remember, don't fall in love with a name. I mean, Boyle's got momentum and stuff, but it's still running. Boyle, it's opened up now. You've got a red candle so far. I mean, $6, I think, Paoletti is where I would say under 6, buy it. Over 6, sell it whenever you want. I think that's the best guidance I can give you for right now. The VWAP is at 603. That's the volume weighted average price. It's at 606. It's looking like it's got some confirmation to go up because you've got a green candle from 925 to 9. Here, hold on. I'll move it back so you can see Active Trader Pro. You got a green candle from 925 to 930. So far, it's a red candle, but I think you're going to move to green. You opened up at 610. Yeah, it just moved green. So you've got some confirmation above that 9-day right now. So if you want to day trade it, you do have some confirmation. Personally, I'd probably wait until it gets down to 6. I mean, it seems to like $6. But as long as I say that, yeah, you're going to be at 7 all of a sudden. But I can see, you can see live here. I'll move you back to the algorithm. Live on this one, you've got just this candle right here. But here's what I worry about with the MACD. I mean, even though the 65-minute algorithm doesn't rely on the MACD at all, I still look at that MACD going down. And I still say, ooh, the MACD has to come back up when the buyers need to show up. But you can see in that 65-minute, I mean, shit, this one was at March 3rd, 1455 at the close. And then it just crashed overnight. And so now we're kind of in this little realm right here. Let me see if I can blow this up. You're in this. I mean, if I just use those 5, that's the range that you're in right now. It's between 630 and 546. So between 630 and 550, say. That would be my range. And if you break out over 650, over 630, I would say good on you, because I do think that this gap up here to 784, I think you make your way back up there. I just don't know when. And right now, those are pretty even candles. Let me see if I have an 8-day EMA. I do not have an 8-day EMA. Let me add one. Exponential moving average. And we'll do an 8-day. and it's going to show up right along the 9 days. So I'll move everything out here. Okay, so that purple line is the 8-day EMA. So that purple line, this will not get a buy until it gets over that purple line, this 65. And so that's going to be around $6.30 right now if you're trading on this one. So I'd be a little bit hesitant to trade here. But again, I think it's hanging around that 610. I think if you get 6, I think you pull the trigger. But I do think that you have a significant stop at 575 because, and the reason I say that, we'll kind of put these back on and I'll take the 8-day off. The reason I say that is because if I go to a weekly chart of Boyle and I look, do I need weekly or can I go? Maybe I should go monthly. Nah, this is probably best. If I look at this one and I look at the top side, let's look at the bottom. We're going to go from right here. And I touch 3 points. And then I touch the top 3 points. We're kind of going to go there. So this is the range. And now, mind you, this is a decaying asset. So you're moving down constantly. You're just at the bottom of your range. But the absolute very bottom is still in this range that you're touching now. You've touched 3 points. In this range that you're touching now, it's about $4. So is it likely that it moves down to $4? I don't know. But that's where the trend absolutely is going. It has not changed direction for the week. If I get rid of this, and again, we're just looking at trends. So see, this week, February 20th, it traded between $6 and $4.34. That's a 27% swing in 1 week. Then you move over here and it moved up. And the high was $7.96. The low was $5.86. That's a 21% swing in a week. So far this week, your high is $6.27. Your low is $5.64. That's only a 1.62% swing. So if you are to continue this 20% move that you've had in the last 2 weeks, you had 27% and you had 21%. If you're to continue that 20% move and it's to the downside, because remember, all of these are to the downside except for last week, and you're not above last week's high of 797 yet. So the high hasn't been taken. So you can assume that this may just be a bounce in a lower trending market here. You can see, for instance, right here. I'll zoom in on this one. Look at this. So this candle, November 14th, you're looking at a high of 43.88, a low of 34.65. Your period is only 1.47. The next one was a high of 59, a low of 44. That's a 12% gain. It went up, but it was just an up in a lower trending trajectory. So that's why I say be very careful of where you're at. Right now, it's trading at 604. Like I said, I think you can get it under $6. If you get it under $6, my personal opinion is when you get over 6, you probably sell it. The RSI is super low at 32. The MACD looks like it's crossing up. But again, this is a 65-minute candle, so it doesn't look at the MACD. I would be very careful with it. My personal opinion, I'm not trading it. I'm going out. I'm going to enjoy my day. So you guys have a good one. Enjoy your trades. I will talk to you tomorrow.